Hello, everybody. Happy Tuesday, Wednesday. Thanks for, well, actually, a lot of you might be watching this on another day. So happy whatever day you're watching this. This is, I think, the third panel that we've had so far in our 2-week finance festival. So let's use the chat. Let me know, everybody, where are you calling in from? Is this your first event? If it's not, what did you go to before? What did you learn? Drop in your LinkedIn too, right? This is all about networking as well. So tell us, what are you looking for? A job? Are you hiring? You got a business? Like, ladies get paid, okay? So just tell us what you need, tell us what you want, and hopefully you meet somebody incredible here. And actually, I know that you will. I wish it was in person, but at the same time, I'm wearing Crocs. So this is also sort of fun. We're also welcoming women from all over the world, and probably not just women too. So welcome to everybody. I'm Claire Wasserman, and I am the founder and author of Ladies Get Paid. We are an educational platform and global community that is all about helping women level up professionally, financially. We want women to get paid what they deserve. I also wrote a book. Came out in January, ladiesgetpaid.com/book. I'd love for you to check it out. You can also follow me on Instagram at Claire Gets Paid. Let me just quickly thank our 3 partners that have made this festival possible. Then I will introduce our lovely panelists and then get off the stage because I actually really want to watch this. So as I do with all of our panels, I have a lot to learn. The 3 partners that have made this possible. The first one is public.com. They are an app for investing in companies that you believe in. So if you're looking to invest in women-led companies, right? Social impact companies, great place to go find them. There's also a bit of a social network component to Public. So that's a great way to learn, right? Just share what you're investing in, why you're investing, and connect with other people. Our other partner is Lolli, lolli.com. So any of you who are a little bit worried about investing in Bitcoin, you don't actually have to do it right now. So what I want you to do, download lolli.com. They've partnered with 1,000 companies that you probably already shop at, right? So I'm talking about Sephora, talking about Macy's. When you purchase from those companies and you have signed up with Lolli, Lolli will give you Bitcoin. So that's a way that you can start investing by basically spending the money that you were probably going to spend anyway. Our last partner is The Balance. So if you have questions about financial literacy, go to The Balance. They have so much content and it's digestible, it's accessible. Cannot recommend them more than I already am. I'm pretty effusive about our partners, and not just because they made this free for all of you. They've really been great for us. And so today is about real estate. So the whole point of the festival was for us to kind of imagine what are all of the different ways that we can make money, and how can we be diverse in the investments that we make. And real estate is absolutely one of them. Real estate's also changing the way that we purchase real estate, the way that we approach real estate. So I am super jazzed that we have women, our speakers. They can talk about all different kinds of components to evaluating properties, knowing what it's time, when you're ready to invest. And if you don't have a lot of money, can you still invest in real estate? That's my question. First, we have Alyssa Tong Anderson. She's the Director of Business Operations and Growth at Cadre, which is building the world's premier digital marketplace for commercial real estate investing. She also used to work at Airbnb. So that'll be an interesting part of the conversation as well. Monica Swinney, and I might be mispronouncing her name, so she can correct me afterwards. Monica Swinney, she's the Executive Vice President at Lex, whose mission is to expand access to direct investments in high quality individual commercial real estate assets. It's a lot there. So she's going to unpack that. Janine, Yorio, and again, apologies if I'm mispronouncing your name. This totally should have been talked about before. So, I guess we'll talk about it now. Janine is the Managing Director at Republic, which is the leading alternative investment platform open to all investors. Our moderator, Julie, VerHage-Greenberg. Probably also butchered that. Thank you, Julie, for your patience with me. She's the co-founder of FinTech Today, a media outlet and community platform for investors, entrepreneurs, and operators in the financial technology space. Wow, I am done hearing the sound of my own voice, as I'm sure all of you are. So thank you for being here. Without further ado, I'm gonna just pass this off to Julie and the rest of our incredible women. But for all of you here, take advantage of the fact that we're online, which means put your questions in the chat, right? They're going to be looking at it all throughout the event. So they may address your question. I would love for you all to put it maybe in the Q&A tab if possible. But if you don't have time to do that and you want to keep it in the chat, they're going to be looking at all of it. So this is a great way for us to just learn from each other. Thanks everyone for being here. I'll let you all take it away.
Yay, thank you. And you got the new half of my last name correct. So you get bonus points for that part there. No one ever gets the first part correct. So I just got married in December. So it's nice that like I now have part of a last name that it's very easy for them to get right. It's a change for me. But I was so excited to be here. And like the chat is basically going to do my job for me. We already have 4 questions in and we haven't even started yet. This is amazing. But I also don't know too much about real estate at this point. Like I've dove into FinTech. I know about a lot of the companies that you guys are at just from basic knowledge of them and writing about them in many instances. But I personally have not waded into the deep dive of like figuring out like, do I have enough money to invest in real estate? Should I invest in real estate? My sister technically has, because she's one of these COVID home purchasers now, where back in like April, May, she bought a home, which we were skeptical about to begin with. It's like, well, like what if the housing market takes a tumble for some reason too? Like you never really know. And it turns out it was a really great decision, because now all of a sudden there's like these all cash offers for homes. There's people bidding up homes. They're selling within like 1 day of an open house. It's nuts. So Alyssa, let me start with you, because you guys are probably the company I'm most familiar with out of all of these, just because I have interviewed your founder, Ryan Williams, before when I was at Bloomberg. And you're trying to essentially democratize access to investing in pieces of real estate. It can be commercial, it can be residential, a bunch of things. And when you guys started off, there was a pretty high barrier to entry. I think you had to have a net amount of like 50 to 100K deposited into the platform, but that's gradually come down where it's getting lower. And I know that Ryan is very passionate about making that amount even lower. So first of all, you've only been there for a few months. You started during COVID, which I find fascinating. Not one of the panelists, but technically 3 out of the 4 of us have started new jobs during COVID. Actually, technically probably all of us have, because Janine sold her company during COVID and has now started something new on top of that. So I think every single person on this panel is now doing something new in the midst of a global pandemic. But Alyssa, you first on that.
Sure. So lots of questions in there. So hopefully I can address all of them. Nice to meet everybody. My name is Alyssa Anderson, Director of Business Operations and Growth at Cadre, which is a real estate investing platform for commercial real estate investment. So that includes multifamily, so apartment buildings, as well as office, industrial, and hotel deals, not single family at this time. In terms of my career, I was most recently at Airbnb. I left right after the IPO in December and joined Cadre in January. And it was certainly a move that I considered very carefully during this time of COVID, working remotely, trying to onboard with a new team. And I think one of the main reasons, other than I really am passionate about Cadre's mission of democratizing access to commercial real estate investments, but I also wanted to get into a corporate strategy type role. And then I think most importantly, and what I've learned over my career, and happy to chat about this if it's helpful for folks, is finding a good manager who really is an advocate for you. And so my boss here at Cadre is someone I've now worked with at the last 3 companies, well, I guess including Cadre, over the past 5 years. And so if there's one piece of advice that I have from a career perspective, it's find that manager who's going to be your advocate and really going to give you opportunities and run with it.
I fully agree with that. Let's do Monica on your front. You're the newest to real estate on this panel. What made you want to switch from a different career into this? Like what sort of passion was brewing where you're like, you know what, like I want to help this company with commercial real estate and, you know, move this sort of segment of FinTech forward?
Yeah, similar to Alyssa, I made a career change during COVID. I thought about it very, very hard. I spent about 10 years as a business consultant, worked in a variety of sectors, a variety of departments. And for me, what I really liked about Lex is I like the mission fundamentally. I like the idea of making an asset class that has traditionally been very closed off to most investors. I liked the way that Lex is approaching opening it up. I think that's really exciting. And then on a personal level, I like the idea of a role where there's a lot of opportunity. I had been at a big company for a long time. It was exciting to think about going to a small company. So it's kind of a mix of professional goals, more, big picture. I really can get behind the access mission very, very easily. So for me, it was a very easy decision. And quite honestly, I figure there's risk anytime you make a decision. And so why not do something like go to commercial real estate in the middle of a pandemic? At the end of the day, buildings are still going to be here. I still think they're going to be a fundamentally really awesome asset class. So it seemed like the right time.
There you go. And Janine, you founded and built a real estate related company and sold it during the pandemic. Talk to us a little bit about, the process of building a real estate company in an era where it was sort of an up and coming era of FinTech, and then selling it and starting working for a larger corporation during the midst of all of this.
Sure, I want to talk about all of that. But first, I want to scold you, Julie, because you did one of the things that I get annoyed with women most. And we're always so self-deprecating about ourselves. And you started this by saying, I know nothing about real estate. Real estate's everywhere. You're sitting in real estate right now. You go shopping in real estate. When you go on vacation, you sleep in real estate. You drive by real estate every day. You know exactly which intersections in the town you live in are the most valuable, and the neighborhoods that are dangerous, where you lock your car doors at night. Like, you actually know a lot about real estate. You know, when you touch down in a new city and you open up Zillow, you say, wow, that's really expensive, or wow, it's a really affordable place to live. You have an intrinsic, innate knowledge of real estate, and it's only this sort of, I don't want to get too philosophical, but this male patriarchy that's made us feel like we don't know anything about real estate, when in reality, we all know a ton about real estate. We need to be empowered and acknowledge that we actually do. We may not have hundreds of thousands of dollars to play with yet. We already have fully formed opinions on what real estate we want to own, how much we ought to pay for it when we finally can, what reasonable rents ought to be, which malls are failing, which malls are succeeding, like all these things that people make sound overly complicated. And I actually think women, because we're the consumers in most households, we have a better sense of which real estate's performing than a lot of men do. Right. I remember I moved to a new town and I told my husband, this grocery store is going to go out of business because the produce was always a mess and the carts were always all over the parking lot. And I was like, and then the whole shopping center is going to one by one lose tenants. And I was right, because I was there every day. And so you do know about real estate, and everybody on this call knows about real estate. So banish that thought. So
I would come to your TED Talk on this, by the way.
So, well, it's not, it just, we all have to do a better job, because men say they know everything about everything, right? They never say, oh, I don't know about, they're like, I'll fix it. I know it. Let me do it. We need to do a lot of that too. So then I had this idea of building a real estate company in this male-dominated industry, which was a very difficult task. But I'd been in real estate for a long time. I started my career on Wall Street. I worked for a real estate private equity firm for a while. Then I went to work at Standard Hotels in New York, where I ran real estate development for them. Then I had a couple of children who are in the background, and the lifestyle I had flying around on airplanes and going and looking at hotels was very incompatible with being a wife and mother. So I started working for a tech startup, which was like a totally different career move for me, but it was in the real estate space. And that's when I became really addicted to this idea of venture capital and real estate, which is, I think that's what all of us are doing now, because you take the world's largest asset class and you add rocket fuel to it, and the things that can happen. You've obviously all seen it with Airbnb, but I think Cadre and Lex are two players that aren't far behind. And it's very seductive and exciting, and startups are fun. So I built this real estate tech company, and recently sold it to Republic during the pandemic. And now I work there. I run the real estate group. We do a lot of really interesting things at the crossover of real estate and crypto. And I'm done talking, but thank you.
No, that was awesome. I can already tell the chat is going wild on your little speech there. So this is a fantastic way to start. Next up, though, the typical ways, like I mentioned before, my sister bought a home during the pandemic. And when I think of investing in real estate, I think of that or buying a ETF, a real estate ETF. But there's obviously other options out there. Monica, let's go back to you on this one again. What are, I guess, to buy a home, you have to have a fair amount of money, right? But there's other ways that you can invest in real estate with very little money. Let's talk a little bit about other ways that our audience can get some diversity by investing in real estate without having to go and buy a home?
Yeah, absolutely. And I mean, each of us can speak to this. We're all working at platforms that are taking this in a slightly different angle. But at Lex, the premise is for as little as $250, a investor, any person with $250 can invest and purchase a share of a single asset building. So one building, you can see it, you can drive by, to Janine's point, check out the corner that it's located at, and then you can purchase a share. We have done all the back end work. So those actual shares are securities, just like you would buy if you go to Yahoo Finance. You can look at the price of a security. It goes up and down. And then we have a trading platform where you can offer your shares to others who may want to buy those. So you can buy, sell, and it's unrestricted. So there's no holding times, anything like that. You're not locked in for any set amount of time. So all of those things are pretty different from the way real estate has traditionally been done. And there's a number of different platforms. We see there's single home platforms, there's vacation home platforms, and those thresholds, the barriers, the capital requirements, or you need to have a lot of money to be even on the playing field. All of these platforms are removing those entirely.
Totally. Alyssa, let's come back to you because I kind of alluded to it in the beginning, how Cadre started out with a higher barrier, but has continuously lowered it. And I remember Ryan walking me through the platforms on there. If you can't go to see the building, they'll literally have like a drone go over and you can see videos of it and really know what you're investing in versus an ETF or some other investments where you're investing in real estate, but you have no idea what it actually is.
Yeah, absolutely. I think that level of control for the investor is something that's very important that Cadre wanted to provide, right? So the ability, rather than putting your money into a fund that then is allocated by some portfolio manager that you don't get a chop to or understand necessarily their thought process, you can actually go to our website and click on individual deal pages, access full investment memos, which are essentially the same memos that we use internally to make our investment decisions. So we're trying to increase access to expertise as well as these opportunities to allow investors to pick specific properties that they want to invest in. We are also, so to your points about minimums earlier, when Cadre started, the minimum check size to participate in an offering was 6 figures. And that has come down over time to $50,000 today. It is our goal eventually to sort of increase the access level by decreasing that check eventually. But in the meantime, one other way that we're trying to increase access is we've launched a new product, which is our Cadre Direct Access Fund. And so that with a $50,000 check there, you actually can get access to a portfolio of our individual deal by deals that you otherwise could select. So that will allow you to get slightly smaller exposure, but you still have to have a minimum check size of about $50,000.
Got it. And Janine, what about you? Because I believe your company was focused on this, and then I think it was a big reason that you guys got bought out as well. I think this is continuing to see a lot of demand. So talk to us a little bit about that.
About buying real estate and being able to buy it for a very low dollar amount?
Yeah, well, I mean, essentially, like, you don't have to go and buy a home to be investing in real estate. You can buy an ETF, you can buy a portion of a building through a different fund. You can, there's so many different options that I think a lot of us don't even realize are out there.
Yeah, I think there are lots of different ways to invest in real estate. You can start very, very small. I think it's like anything. You're probably well served to learn a little bit before you dive in head first. I do think HGTV has ruined us all. We think fixing and flipping is really fun and easy to do as a side hustle, and you're going to make hundreds of thousands of dollars without working very hard. And you're going to pick out paint colors and tile while you do it. And that's largely inaccurate. Most people that do it work at it full time. They oftentimes don't make money the first couple of years. So it's good to dip your toe in the water slowly rather than quit your job and say you're going to do real estate full time. I think buying REITs are a great, easy way to do it with full liquidity, but you don't get that connection to the real estate that you would if you, say, bought a piece of a building through Lex, or you went to Cadre and invested in a ground up development deal where you're sent regular updates about the progress of that project. So depending upon how in depth you want this learning to be, you can pick and choose one of these products, or you can pick several of them. You can put, a few $100s in Lex. Cadre has a fairly high minimum at $50,000. So it's harder to diversify there. But as you become wealthier and invest more, you can use that as another asset allocation tool.
Right. So we keep talking about diversifying as well. How much of my portfolio should I be dedicating to real estate? Alyssa, if you want to go there too.
Yeah, so I just wanted to add on a little bit to what Janine said. I loved the idea of just different levels of involvement and different ways that you can participate in real estate. I think we've talked a little bit about owning a home, flipping it. That involves you being, and just having general education and knowledge, right? And then there are certain platforms too where you can really leverage the expertise and the knowledge of partners, whether it's, at Cadre, our investment team, or even Cadre, we leverage the expertise of our on-the-ground partners, our sponsors, who are actually managing the day-to-day of our apartments. So to Janine's point, there's a really wide range of different ways that you can participate in real estate investing. I think it's great. Generally speaking, I can't really give advice for legal reasons, but I think a good rule of thumb that I've personally followed is sort of 10% in alternatives, and that would include real estate. But that's just for me. That's not a reflection of Cadre's advice by any means. So.
What about Monica and Janine? Monica, I'll have you go first here too. Like, what in general, I would assume, if you buy a home, that's going to end up being a large portion of your net worth. But if you diversify in a smaller extent through a REIT, ETF, something else, what do you guys have any general rules?
Yeah, look, like Alyssa, I can't actually give investment advice. The way I think about it though, just ladies to ladies, I'll give you the anecdote of how I got into investment and how I got interested in finance. I was going out on maternity leave. I went to a work event, literally my last afternoon before I was going to go out on maternity leave. It was like a gardening thing. We all took the ferry to Governor's Island. And my friend told me that he'd started some investing on the side, and this is almost exactly 4 years ago, and that he learned that most people actually spend a lot more time researching their vacation than they do planning for the future or thinking about their finances at all. And the partner we were with was like, oh my gosh, that's terrible. And I was like, oh, that's definitely me. So I went home that day and I ordered 10 different books about getting smarter on investment, the way to think about, what financial planning should look like, what your portfolio would look like. And I actually think, my personal perspective on these is you have to think about it in terms of what you want. If you're married and you have children and you are living in an area where there's great schools, then maybe buying a home should be a greater portion of your investment pie. If you don't have those things and those are not the drivers, you have a different values base that is driving your investment strategy, then you might have a very different piece of the pie. I think at the end of the day, diversification is widely seen as a really good strategy. And I think that's why all of the platforms that we're talking about today are so exciting, because they all are giving us more access. But it's going to really depend on what you want your actual portfolio to look like based on your needs, based on where you are today.
Yeah. And Janine, I'm going to flip the question a little bit just based on what people are saying in the chat here. And something I think is different over the last few years, especially during COVID, when everyone thought the stock market would do terribly, but it's actually done really well. And people are making a lot of money on not only stocks like GameStop, where we hear people making millions and it's going crazy, but if you even just invested in Nike, Peloton, Walmart, etc., you would have made a really good return. So when you're making good returns on stocks, it's harder to convince someone to diversify into other asset classes. But in my mind, and correct me if I'm wrong here, the point is more so just diversification, because there's going to be times where real estate does really well and the stock market doesn't, and vice versa. And it's just a way to make sure that you're never losing a ton of money. It's a way to sort of hedge and make sure I'm always beating inflation, essentially.
So, there's a very long, complicated answer to that question, but I think the easiest thing to do is think about how do the really wealthy people, actually wealthy people invest. And they put a little bit of their money in crazy ideas like GameStop, right? Because they're not going to lose it all. But they put most of their money into real estate. Why is that? Why is it when every basketball star makes a lot of money, they go buy a condo in Miami? Why every time, somebody gets a big lump sum payment, they buy a building, they buy a 2-family rental? because they don't want to lose their nest egg. And why do we put it in real estate and things like that? Because it's lower risk. So yes, if you invested in Peloton, you did really well over the last, since their IPO, but you also took on a lot more risk when you did that, because there was a chance that not every woman in America wanted a Peloton during a pandemic. Just so happened that there was this Black Swan event and they did really well. It could have just as easily been the most passé piece of exercise equipment ever made, and you would have lost a lot of money. Real estate, conversely, has held its value over the long term because people always need a place to live. Human population demographics are growing. So there are underlying macro trends that explain why real estate generally appreciates, it generally holds value, and it's a way to preserve wealth. It also generates income while you're preserving that wealth. So you get the benefit of some income, but you also usually beat inflation because the price of real estate usually outpaces that of inflation. So it can feel very exciting to invest in these very volatile crypto assets or high risk stocks that you hear about on Reddit, and it's fun. But if you start making money, I promise you're going to say, wow, I actually made $25,000 in the stock market this year. Should I put in real estate now? And so that's what people do when they're looking to set aside their winnings. Like when you go to Vegas and you have one pocket and you put all the money you made in blackjack in one pocket. So you make sure you don't keep going to the ATM and losing more and more money. And that's how you should think about real estate. It's the place where you put the money that you don't want to lose.
Yep, makes sense. So Susan actually here has a good question that I want to direct towards Monica, since she's on the commercial real estate side, is what are the differences between commercial and residential real estate investments? I have a number of residential properties, but I am much more hesitant about investing in commercial.
Well, I mean, one thing for us, just as a homeowner, if you invest in the commercial real estate assets that you would find on Cadre or Lex or anything like that, you don't have to deal with the operational mayhem of homeownership. Like I have a house that was built in 1950, and I feel like all I do is find stuff that is wrong with my house and have to fix it. With commercial real estate, you can invest and not have to take on that sort of day-to-day, more operational sort of headache. It's also, there's a bit, and it depends on if you are, I don't understand if the person asking the question owns those and is renting out those different residential places. But, when you think about buying a home versus investing in a commercial real estate asset, commercial real estate, you invest with a different mindset generally. You think about a lot of what Janine talked about, like there's the possibility of getting distributions. Buildings generate money. And when they pay off their management fees and they pay off all their other debts, things that are, profit that is left over can be given out to the people who own part of the building. So it's a very different thesis. Does that answer the question?
I think so. We'll look in the chat and see if Susan says anything on here. But in my mind, that definitely answered quite a bit of it as well. So thank you for that. Does anyone, Alyssa, do you have anything to add on that, since you guys also do some commercial real estate investments?
Yeah, so for us, we do multifamily, and then I guess within commercial, that would include for us office, hotels, and industrial. We just did a life science industrial building. I think one really key difference, so if you have a single family home and if you're renting it out, right, you're probably managing one family in and out at a time, or maybe it's a long-term renter and you're dealing with one person living in your house. For us, when we evaluate our investments, we do a lot of diligence on the business plans, which can be a little bit more complex. So for multifamily, we have to look at the entire tenant base, which can be 300 plus units. And is there a plan in place to renovate those units and then potentially increase rents, right? Are there other revenue streams within the building, maybe from laundry room, for example? And then with offices, we're looking at deep diving into the tenants in the office space. What is the credit of those tenants? What are those business plans? Are they going to be there for an extended period of time? What is the risk that they might potentially turn over? So to Monica's point, there's a lot more. There are a lot of different factors that we're looking at, as well as some of the same things, of course, when you're dealing with single family homes, such as supply and demand and demographics of the general market and things like that.
Perfect. So another question I see here that I would actually love to know too, because I just moved to Austin, Texas, and I am at that stage in my life. Are you in Austin too, Janine? Oh, you were like waving. I was like, wait, is she here too? We need to meet up. I feel like Janine would be a very fun person to meet up in real life with.
Not fun at all. Not fun.
But anyway, so I don't know if you guys have read about Austin real estate lately, but everybody's getting like all cash offers above ask, and the asking price is like 50% higher than what it was 2 or 3 years ago. It's nuts. So this is one of those waves that we're seeing in real estate. And the question in the Q&A is, real estate is so cyclical. How do you kind of hedge yourself with all of these waves that are going on? And I want to direct this one towards Janine, since you spent most of your career in real estate.
So I guess, look, nobody has a crystal ball ever. But if I had to bet on where I think Austin prices are going to be in 10 years, I would say much higher than they are today. I think Austin has a lot in common with New York City. It doesn't have the geographical barriers. It's not an island, but it's immensely popular. It has great weather. It's in a low tax state. It has a diverse economy. It has a big university there. And prices always look crazy today, but when you look back, you wish you got in when you did. And New York City has always been that way. The prices never have ever made sense, right? You're like $2 million for a 1-bedroom apartment. That's insane. But people have been saying that since like 1901. And the people that actually pulled the trigger in 1901 feel very vindicated looking at it in hindsight. And I do think Austin is going to appreciate, even though it feels crazy today. I also have a theory that different markets around the world are going to start achieving parity, especially in the work from home environment, because wealthy people are willing to pay a certain amount for a house that's nice, right? And now wealthy people can live in Austin or New York or Paris, and we're going to see price convergence in all of those major markets. We saw it happen in big cities already, like London, New York, Shanghai. The prices are kind of on par with each other. And I think the secondary cities, Austin, Boulder, places like that are going to start seeing parity as well, because wealthy people with good jobs want to live in those places. And they're going to say, wow, I can get a small house in Menlo Park, I can get a slightly bigger house in Austin, and I'll move to Austin. And next thing you know, they're competing in an auction for a house there, or not an auction, but a bidding war. So I think Austin, I'm very bullish on Austin long-term. People love it, and that's not going to change. People want to be there, and there's a lot that's great about it. So I'm long Austin, and I would say, close your eyes, jump off the cliff, and just do it.
Oh man, I wish I would have moved here like 6 months ago and tried to do it even more, because now I'm like, wait, like I could have afforded that house 6 months ago, and now I can't afford that house anymore.
You're young, and it trust me, in 5 to 10 years. Also, I think people get hung up on like $20,000. First of all, if you borrow the money, $20,000 is like $20 a month. It's nothing, and you shouldn't lose a house if you're bidding on it over 20 to 50, even sometimes $100,000. I know that sounds cavalier, and maybe I'm privileged for saying those things, but don't let what is going to be in hindsight a small amount of money prevent you from transacting, because half the battle is getting into the market. If you never get in the market, you'll never get in the market, so jump off the cliff, take the dive. And on that note, guys, I'm jumping off, but it was really a pleasure, and I really appreciated meeting all of you. Thank you.
Likewise. Come visit Austin. I need to meet you in person.
Absolutely. Bye.
Continuing the conversation here, and I think this is a good one for both of you. How have your industries been impacted by COVID? Because I know, Monica, you mentioned how you think long term, like these are still good investments and people are going to want to use them, but there's obviously been an impact. How do you see that changing? Because I do feel like there's a lot of companies that are never going to have their full workforce go back to an office, so they're not going to need as much office space.
Yeah. We talked a lot about already some of the changes that we're seeing on the homeownership market and the massive, I don't want to say flight, but maybe flight to the suburbs. It is extremely scarce right now to find houses in many, many more suburban areas. But then there's also a lot of trends, on the commercial side. We were talking about this earlier today, actually. And, if you think about the commercial real estate marketplace, looking at the different cities across the US, New York is this big. I can't even show it. And then everything else, it's grossly out proportionate to everything else. And the New York market right now has a 20% availability rate in Manhattan, which is really, really high. So there's things like that aren't great. But I also fundamentally think that people are going to continue to go back to the office. I think I get real estate alerts for a lot of different, different sort of journalistic things. And I see sometimes conflicting trends, and I see one person saying it's going this way and another saying that way. But, if I take a step back and look at like the broader picture of what I'm seeing and hearing, there are cities that are opening back up. My brother-in-law in North Carolina got his vaccination a long time before any of us did, because he works in financial services and they were put at the top of the list. That tells me that North Carolina thinks financial services is going back to work in an office. We're also seeing trends. I've spoken to people who are seeing different layouts. Maybe we need less cubicles because we're going to have less people, but we need larger space, because when we have people here, we want to have them be able to actually be here and communicate together and have working sessions. So maybe we need, a different layout. So I think there's trends in a lot of directions. And like Janine spoke about, there's going to be different things. Different cities are going to pick up sometimes faster than others. Alyssa, I don't know if there's anything you want to add to that.
Yeah.
Yeah, so we play largely in the multifamily space, and our portfolio has held up surprisingly well. I think, it's bouncing back. We're seeing with the job growth, that's been really helpful. And the types of assets in the cities that we're focused in, right? We've largely stayed away from the gateway cities, and we focus more on Class B assets in some of the secondary cities with more blue class workers or sort of younger white collar workers who haven't been fleeing the really, really expensive cities, which is, I think, a trend that we've seen a lot, especially during COVID times. So that's been good for us, and we continue to stick with that investment thesis of sort of secondary cities, value add type properties. I think too, when we talk about value add for folks on this call who aren't as familiar, that's usually where we will look at an asset that might have a way that we can, so similar to a fix and flip home, where you might want to renovate the kitchen and the bathroom, we're doing similar things, but on a larger scale with multifamily buildings. And so that builds in a little bit of sweat equity that helps if there are kind of disruptions to the market, like a pandemic, where we can actually create value for ourselves in our portfolio.
Monica, I'll go back to you on this one, since you mentioned that you do own a home. So for me, Austin real estate prices are crazy right now. Is there any point in me getting a space that is larger than I need, like a sort of a home where I could rent out a portion of it to a tenant? Like, what are sort of the thought processes that can go around that? Because it's a little bit different, like if I was still living there versus just like buying a home to rent out to other people, which I know a lot of folks also do.
Yeah, to me, this is where, and I think Julia mentioned this, I think this is where education matters more than anything, and thinking about, how are the different ways that this could play out? Do you want to rent part of your space and share it with someone? If you are okay renting your space and sharing it with someone, then that could be a great strategy to pursue. But I think with all things related to investment, there are pros and there are cons to virtually everything. Every single house is going to have something that's great, and there's going to be something about it that you're just like, ugh. And I'm sure that's true of virtually every single investment. I think of different companies that I've invested in, and there's always something that I love, and then something that I'm like, maybe less excited about that. But I think it's really a matter of saying, okay, how do I go in with my eyes wide open? Does it, like I have a good friend who just bought a house. She's in her 50s. She doesn't have children. She could care less about the school district. And she was so frustrated with her real estate agents for talking about the school districts, because she was like, this is so meaningless to me. There's someone else like me that I can sell this house to in 10 years if I decide to move. So I think it's really just a matter of trying to figure out how to ask yourself the questions that you need to ask. Hopefully that's helpful.
No, totally. And I think next on here too, just thinking about how real estate investing has changed over the last even just 5 years. Alyssa, you on this front, I know Cadre has a higher limit, but it's going to be lower eventually. Is someone that 5 years ago wanted to invest in real estate, the landscape looked a lot different for them than what it looks like today. There's so many other options that are out there.
Yeah. So Cadre's minimums are still relatively high. They are lower than when we started, but I think Cadre is part of a bigger trend in FinTech to give access to investors to different ways, to different asset classes. Art, right, for example, or real estate. And then specifically within real estate, there are a lot of different companies like Lex and my former company, Realty Shares. And then there's, the CrowdStreets and the Fundrises of the world that are providing different alternatives to your traditional private equity funds or your public REITs, right? And so I think it's a really exciting time to start looking at real estate and all the different ways that you can participate in this type of wealth creation.
Monica, I'll have you add in here. So if I invest in something on Lex or Cadre, what are the different financial implications of that versus an ETF? Like the tax implications with capital gains, like what should I be thinking about when I'm making a choice on which one's the best for me?
Yeah. I think you gotta, on all of these, and again, Alyssa and I are probably a little unable to truly give investment advice on that sort of thing, but real estate obviously famously has tax benefits. So as you look at these, you've got to look at what your overall income is, though, and figure out, with distributions, those are going to be treated differently than, different ways you might earn money on these platforms. So, and I think I just had something else that that totally slipped my mind, but
totally fine. It's late in the day.
Exactly.
One other key differentiator, I think, when you're talking, especially like ETFs, right? I believe was your comparison versus real estate is liquidity factors, right? And so oftentimes if you're investing into a house or into a commercial real estate investment through Cadre or Lex, maybe less so Lex because you seem to have a marketplace that's a little bit more liquid, but our investments tend to have, call it a 5 to 10 year hold potentially. And if you are buying a house, you're probably going to own it for a period of time. And so you have to think about, are you willing to have that money tied up for an extended period of time potentially? And then there are options, Lex is building out a marketplace and Cadre also has a secondary marketplace, which allows you to trade in and out of your positions on a quarterly basis with some limitations, obviously liquidity not guaranteed, but that is a very important factor, I think, when you're considering something like an ETF or a publicly traded stock versus a private investment like real estate.
Right, that makes sense. I'm getting tips in here on how to find homes in Austin. This is amazing. For like house hacking opportunities, Airbnbs, Alyssa will like that one. Extra room rentals. Maybe I should just buy a home and rent out half of it to like a TikTok influencer and they could essentially pay my mortgage for me. There we go.
So actually on that front, you asked Monica a question earlier about home ownership. I guess this is more of a personal tidbit rather than, again, not a Cadre perspective, but I think, so I bought a condo in San Francisco probably 5 years ago. And I think what I would have liked to have known, especially when thinking about whether it's going to be a good rental property, which I didn't quite think about in the right way at the time, is what are those fixed costs that are not just your mortgage payment, right? So there's going to be money that we have to put aside every month for taxes, for insurance, and then HOA can be a real killer. And so I would that's the one piece of advice that I wish I had had when thinking about buying a single family home is to consider all of those additional costs on the side. Hopefully it's helpful for people who are considering that type of investment.
And actually, if I can also give a personal tip, I think that's a great ad, Alyssa. When we bought our house, we brought my husband's a New Yorker. We'd been living in apartments for forever. If you can have a friend, again, everything I think about investment, the more you can get your eyes wide open, the better off you are. So if you have someone else that that can go there with you and will have an outsider's perspective. Sometimes they do that on HGTV. I think that's one of the smarter things that happens on HGTV. But again, anything you can do to try because your friends may notice things like, if they have a house, they'll know to ask about the homeowners association fees and things like that. So all the questions, we had no idea what we should be asking back then.
Yeah. Well, that brings me to my next question, actually. And there's so many personal finance websites out there where I feel like I can get information on basic investing and how much I should be saving for retirement and all of this stuff. I don't know where to go to just figure out real estate investing 101. Where do you guys recommend going for learning about stuff like this? The fact that there's no answer right away means there's room for someone to build something where it teaches you how to invest in real estate.
I think there's, go ahead.
Oh, I was going to say, I mean, that is something that Cadre really wants to do a lot more of, is to increase access to educational materials for real estate investing. And we'll be launching, and we have a blog that you can go to if you wanted to look at some sort of ideas. We're going to start doing, interviews with investment professionals at the firm, ideally interviews with other experts in the space. I personally listened to some podcasts. I was just listening to like a Leadership Next podcast. Granted, Ryan was on that, so that's part of the motivation. And then I read a lot of publications, so like Deal Book within the New York Times, or the real estate section within the Wall Street Journal, I find to be very helpful.
Yeah, absolutely. And I mean, similarly, Lex is, single assets. And so each of our assets, we are committed to making sure that people can research on their own. But I also think there's tools like just Investopedia. You can get a long way if you just start with Dr. Google. When I first heard about Lex and first heard about the mission and really started to ask myself, is this something that I could really get behind? I just honestly asked a couple of my friends. I went through my network and honestly looked at LinkedIn and said, who do I know in commercial real estate? And started doing some basic Googling. I think Janine was right in that we all know a lot more than we think. And once you start to get a little bit of a framework to ask yourself some questions, you'll find that you can start to get smart pretty quick.
Yeah, and someone else also just mentioned here, and this brings up a personal anecdote for me, is buying in New York City is crazy, especially if you're doing a condo, just because you have to get approved by the board and like all these other things that going along with it. I have a friend that just went through the process, and it just sounds absolutely insane to me, all the things. So I think even just like not only understanding basic real estate, but really honing in on what you need to know for your specific market is super important too.
Mm-hmm. Mm-hmm.
And this is why I felt like I don't know anything about real estate, right? Like there's just so much to know that I feel like I've only scratched the surface myself when trying to learn about all of this. Let's see here. I want to make sure I'm not missing any good ones from the Q&A. Oh, here's a good one. So when you think of your 401k and retirement, it's like buy and hold long term. When you think of other investments, it can be more shorter term sometimes. How long should we think about holding real estate investments, assuming it's not your home that you plan on living in for a long time? Monica?
Yeah, I mean, that's one of the premises of Lex. And that was one of our founders' general ideas, is that they wanted to create a marketplace for individuals to buy and trade without any sort of restrictions, shares of these individual assets. So with Lex, you can buy something and say, oh crap, I didn't want to do that. I'm going to put my share back on our secondary market and, hope that someone immediately swipes it back up so that I can get that money back. Or you can hold on and, the hope is that when the building pays out distributions, you can earn some of that money. You can, again, the hope is always that you've invested in the right asset and it's going to go up in value, and that's good for you as an investor. So one of the big goals of Lex was creating that flexibility and creating the opportunity to not be locked in. I think about where I was 10 years ago, and it was very, very different. I try not to think about myself too much in 10 years from now. I'm not sure that's too healthy either. So, it's a new way of, giving you that flexibility, since who knows, your needs could totally change.
Right. Alyssa, do you have anything to add on that?
Yeah, I mean, personally, when I think about the real estate that I own, I wanted to get into it for an extended period of time, 30 years. When I think about it from a Cadre perspective, I think we look at it as what is the right time frame to hold this based on the business plan that we intend to execute, right? Mm-hmm. And as well as the trends that we're expecting in the market. And we've got an extensive data science team. They have crazy machine learning models that leverage, over 270,000 data points to try and predict, to the extent possible, prices or movements in the market and things like that. And so when we underwrite these assets, we underwrite it based on a combination of the business plan as well as our expectations for the market. And usually that's between 5 and 10 years. And so I would say if as an investor, you're considering participating in those offerings, it's best to assume that that you won't need that cash freed up, because that could, lead to potential issues if you do. Although, of course, we do have that secondary market with some opportunity to liquidate. The nice thing is that there is also a component of cash flow, which has been mentioned a few times. So for an apartment building, right, that cash flow is generated because every month we're collecting rents from all of our tenants, and after paying all the operating expenses to keep the building running, there's usually some additional cash that can get distributed out. So that's sort of nice to have in your pocket, but ultimately there is a large amount of money that does get tied up for anywhere from 5 to 10 years or less, depending on how the market moves.
What about Generation Z? How are they thinking about real estate investing so far? Or are they not thinking about it? Because I know for the longest time, people are like, oh, millennials don't want to own homes. They just, they're even scared to own stocks at this point because they've lived through the financial crisis. How has that shifted, and how does Gen Z act around this as well? Alyssa, I'll let you keep going.
How Gen Z is thinking about real estate investing?
Yeah, because I mean, remember all the stories where people are like, oh, millennials never want to own homes. They just want to rent everything. They don't even want to own cars, etc. Like, how is Gen Z thinking about all of this?
I mean, anecdotally, I think that's probably true, which is why so many of these platforms that pop up that allow for fractional ownership, so you can still participate in real estate and the wealth creation from real estate without necessarily being tied down and having to take care of a physical building. I think that's why so many of these platforms are evolving and being created nowadays. So it's super interesting. I have to imagine too that in COVID times, and I know I personally kind of picked up and moved to a different place for a few months here, a few months there. I would imagine that having that flexibility also makes it less desirable perhaps to be tied down by an asset that you have to personally be responsible for, like making sure the plumbing continues to work, for example.
Right. Monica, what do you have to add there?
Yeah, I mean, I also think there's a bit of a, I have no actual expertise in this, but I will share a stat that I learned in grad school, which is that Canada and the US and Australia have similar home ownership percentages. So a similar number of Canadian Americans and Australians, I think it was those three countries all have the same general levels of home ownership, but the tax incentives for ownership are incredibly distant. We have this idea that you need to incentivize it here, and that's going to drive this optimal amount. But the reality is, my grandma, she's 95 years old. She doesn't actually want to be in a single family home right now. She doesn't want to necessarily own a home. I have friends who want different flexibility. For me, I don't really want to be moving my kids to a different school every single year. That's just not, to me, it makes great sense to own a house. So I also think there's a bit of where you are in the arc of your life that makes a big difference. So yeah, I'm not surprised at all. We see people right now who are just out of college and want to be able to live here and there and everywhere, since there's no office to go to this month. But then, other people are going to have a totally different experience.
Alyssa, I'll let you take this one due to your time at Airbnb. There's a question on how to think about renting out a space to Airbnb versus renting out to a long-term tenant for investment income.
Yeah, that is a great question. And I mean, so at a high level, right, with Airbnb, you're getting shorter term stays. So there's a little bit of risk, especially, if there's a pandemic that hits and people can't travel. Whereas if you have a long-term lease, it's usually a 1 year or multi-year term. And so you will have a tenant that will continue to pay rent, if everything lines up and there's no issues with jobs. So there is a little bit of risk with doing a short-term rental. There are also some, often there are regulations that you have to worry about too, depending on what jurisdiction you're in. For example, where I am right now, in Hawaii, there are rules that you can only rent it out to one party every 30 days, right? And so it's very important that, and I think in New York City, you have to have registrations that can cost money. And so it's important to understand before you want to start Airbnb your place out, which is essentially a small business, right? Make sure that you understand the rules and the restrictions that you're going to run into. The benefits, of course, other than getting to meet your guests and potentially growing sort of that belonging community of Airbnbers, daily rates tend to be higher, right? So you can charge a little bit more per night. You have the option to kind of use the space as you want. You have a little bit more flexibility. Maybe you've got a friend coming to town and you want to open up your guest room so you can't kick out your long-term roommate. And so it's definitely a very different proposition. And then there's costs associated too, right? So if you're renting it long-term, you can probably pass through some of the electricity or the utility bills to your renter. But if you're doing an Airbnb, you're probably paying for cleaning fees every time that a renter comes through it. So you just need to think through both the potential revenue streams, the risks associated with those revenue streams if it's kind of choppy, as well as the costs, the different sets of costs associated with running an Airbnb versus having someone who's just in your place for a long time.
Right. One other question. I know we're coming up towards the end of this too, for both of you. So there's a lot of people that sound young in here. There's one that mentions that they're in college and looking at starting investing in real estate. If you're making your first investment and it's only, I don't know, like $500, $1,000, what should you be putting that money towards? Should you be putting it towards something like Lex? Should you be doing a REIT? Should you be doing something else? Like, what are the things that you should consider in there? And I know you can't give investment advice, but like, I guess just answer it as like, what are the considerations you should have for each of them?
Yeah, I think you got to look at the whole entire package. Obviously, I think Lex has great securities. We're going live later this year, and I encourage all of you to check out our website and learn about us. But I also think you've got to look at everything really holistically and say, what's my best guess at this? Do I want this? And do I want to be able to get this money in 6 months? If it's really, really important that I have the same amount of money in 6 months, then you probably want something where you're not going to get, a great return, but you're going to be really confident you're going to have that money. Different, however long you want to hold it, that's going to really impact things. Get on to different platforms, check them out, say, what am I really paying for? What are the fees? And, if it's $1,000 and that's all you have, it's great. Start with that $1,000. If you can split it and put 500 there and 500 somewhere else, that might be a good idea. Again, without, giving any investment advice, that's what I might have done when I was 23. So
perfect. Alyssa, what about you?
Yeah, so I think it's important to understand what it is that you're trying to achieve with your investing. Is it because you want to get experience, you just want to test it out, or are you trying to save for something or earn for something in the future? And everybody's situation is different, but it's important, to Monica's point, to think about that holistically. And then I think with all the other piece of advice that I would give, just more generally, is there are so many different options out there. You no longer just have to have a financial advisor at some big firm. There are so many self-serve ways to invest and to grow your own wealth. And so definitely check out all those options, because a lot of them you can start with very small dollar amounts and then work your way up to perhaps an investment with Cadre. But I would say there's some really cool opportunities out there these days.
Amazing. Well, that is 8:01 or 9:01 Eastern time. Or what time is it in Hawaii right now? First of all, I'm really jealous that you're in Hawaii. But two, what time is it? Because I know you guys are like way back on time.
It's 3 p.m. So it's a 6-hour time difference from the East Coast at this time of year, 5 hours when there's no daylight savings.
Nice.
Or when there is daylight savings.
I forget which way we are right now. I just remember like spring forward, fall back, and that's how I remember it. But I just booked my honeymoon to Hawaii in September, so I'm very excited for that. But on that note, that wraps up our panel for today. Don't forget, there's a slew of other panels that are still happening through the end of this week. And also, they mentioned that I run FinTech Today. If you email me at julie@fintechtoday.co, I can sign you guys up for a free month since you guys attended the event as well. Otherwise, thank you, Monica. Thank you, Alyssa. And thank you, Janine, for joining us. I learned a ton, and I will no longer say that I know nothing about real estate now.
excellent. Thank you.
Thank you.
Thank you to everyone. Stay in touch.
Absolutely. All right. Thanks, everybody.